Okay, team, I want to do a breakdown on what day are we on? Tuesday, Wednesday, yesterday's price action on specifically on the New York Open and specifically on NQ. So what we're looking at here is the daily chart, and I've mapped up or marked up what for me were the key points going into it. So what we got is a massive green candle here at this point in time. Bear in mind, this is sort of coming into the New York Open here, so we've already pushed up. That would be a point of interest. Relatively equal lows. Also, there daily VI there. But for me, at this point in time, the most important key area was this daily fair value gap. Bear in mind, fair value gaps are there to be filled. And we've got massive bullish action already. Note on this one as well, and this is very common, that candle there is rejecting exactly 50% EQ on that daily fair value gap. And what that means is to rebalance, right, that becomes an obvious target. So that's a quick overview on the daily. And I want to get into dropping down straight into the 1 minute for the New York Open. So we'll switch to that. We may have to move this. I don't know. What are we? Control left arrow. Yeah. Okay. Scoot back to current time, which is here. Right. So here we are coming into. Have I done this correctly? I think so. Yes, I have. It just needs to come over a bit further. So because we've got in the 1 minute, we've got more data. So instead of being there, the value gap needs to come over here. That's it. So there's a relatively equal lows, and you can see in the 1 minute it's quite the way down, and we're very bullish. So we're not looking to go down. What we are looking for is a New York point power of 3, right? Which means we've had consolidation. So on the open, quite often you'll look to see manipulation going down and then expansion towards the target and a pullback to complete the daily candle. All right, so that's where we're currently at. So on a smaller time frame, what else do we see? What else is key here? First thing that jumps out, right, is the London low, which is often a very important draw on liquidity. Any session highs and lows are important draws in liquidity. So let me just get that on there and add that in there. So we got some clarity. So this is what I was seeing going into the New York Open. Very interesting yesterday. A lot of people got chopped up yesterday, with understandable, because if you remember on the daily time frame, we've already been over. We're in a bit of a consolidation phase at the moment. So you're expecting choppy price action, basically. That's the long and the short of it. So I'm going to play this forward one by one and show you what we're looking at. Okay. So I'm going to make these candles a little bit bigger. I'm going to pull this even further over here. I'm sure that is a little bit off. I'm sure that was up a bit. But regardless, we'll plod on for this one. So there is pushing up into the London Open, and that's the first thing that we get is a big rejection. Okay, so right, now then, because we've had that big rejection there, we've got a little gap up there as well to consider. Now, from my perspective, that selling action is enough, even though it's a little bit on the small side. It's not ideal, but that would give me 1, 2, the next candle. Let's have a look. Yeah, on the next candle, 3 candle pattern, that will give me the first presented fair value gap there. Okay, so we'll just mark that up. First presented fair value gap is always something that I look at in the New York Open. Let me just switch back to the daily a minute, see if I've got that marked up correctly. I'm sure I must have. No, I haven't. thought it didn't look quite right. That first presented fair value gap, look, as I said, was a bit higher. So it's actually there. Oh no, have I just moved the, no, that's the daily. Right, okay, so we've got the daily, and this one is up there. Pretty much the same sort of thing. Back to the 1 minute. Control Alt, Bosh. Get back there. Right, so let's have a look. To pull that over again so it matches up here, right? Don't know why he's shortening it like there. So we've got to wake up. Rightly on this one, on that one, we didn't quite hit the fair value gap, but we have rejected off it there. And again, same applies as far as the first presented fair value gap is concerned. We've got enough bullish price action there to justify that tiny little VI there, tiny little gap up there, but bear in mind we're on the 1 minute, so the higher time frame always overrules the lower time frames. But okay, let's see how this plays out. Now, I'll be quite honest, I messed this up on this day. I got in here because recently we've had a lot of cases, a lot of days where we've just gone from the first fair value gap and just expanded, taken out the drawn liquidity was what we're expecting. We're expecting downward action to come back up. So we're expecting this as the manipulation and then this as the expansion. That's what we're looking at, all right? So again, all of this is sort of part of the thinking going in here. And I think this one cost me a stop, I think, on this one. Well, I know it did. So, because what happened was we didn't quite get, another thing to point out here very quickly as well is the lunchtime low. Sometimes if it hasn't got enough strength to get to the actual drawn liquidity, it can, on occasion, substitute this for drawn liquidity as well. So that is something worth knowing. So we'll put the lunchtime low in there. Low as an interim drawn liquidity, or TP1 if you like. Okay, but that big green candle there took me out because I'd already moved my stop down. But anyway, that's the way the cookie crumbles. Price action is not always perfect the way we'd like it to be. Now there, interesting, because if that had reclaimed the fair value gap, it might have left these lows as engineered liquidity and run that way. So you've got to be prepared to switch buyers some days as well. You know, it can happen. But saying that, on the 1 minute, we've got a massive rejection. But we have closed below the first presented fair value gap. So technically, that is an opportunity to enter there. Again, to chase these lows down here, see if we can get down to those. I think because that candle spiked up, I sort of hesitated a bit there. And then down there, we've lost a lot of momentum. And then, we come back up again. Now, this candle is closed bullish, but it's closed inside the first presented fair value gap. And that is sort of where we start noticing there's something more going on here. Because there's a saying that the wicks do the damage. They'll wick you out, hit your stop losses. But the bodies tell the story. And notice we've yet to have a body close above the first presented fair value gap. So the trade is still valid, basically. Next candle does the same thing. So we've got 4 candles now failing to break. That would have been a great entry. So we put on an entry there. Obviously, you always want to be thinking about risk to reward, you know. But really speaking, if this was TP1, TP2, okay, depending on what your lot risk is. But we've got to be aware that this is, because the daily is in consolidation and this price action is a little bit choppy, instead of, you know, going here where I probably normally would look to go initially to give you a 6 to reward, then, you know, I'd probably gone above that one there, which is 50% of that candle wick. That would be a sensible stop there as well. So we're just going to leave this play out a little bit and show you what happened. So there we've hit TP1, okay? But again, we have got very, very choppy price action. And again, I didn't play this the best, I'm not going to lie. I faked out on that one, faked me out and then come back up and stop me. And I'm not sure where I got back in here, but I did get back in at some point. And again, once we've gone down there, right, you'd be very, if you hadn't come out completely there, you'd be within your sort of logical thinking to, you know, bring that stop right down to minimize any risk if you hadn't got out. Or that would have been a good opportunity to get out. Just on the first TP. Knowing me, normally I'll go for the full draw liquidity, not the sort of partial one. That's my tendency. However, in this choppy price action, you never know. Sometimes it's best just to take the profit when it's on the table. So what happened next? So we're into this. Now we've had a pullback, so we've gone up, we've gone down, we've come back again. Very valid to go down from there. Couple of an indecision candle there on the doji. We've got this, so we're back down there again. So this is now looking a bit better to go down and take the London low. So again, you know, whether you're still in, whether you're still out, whether you're taking a partial, big rejection there, bit unpleasant, choppy price action, all the way back up. Look, needed entry on that one there. Choppy, 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 choppy. Oh, now we've got a lower low. We've got lower low, lower low, lower low. So even if it does pull back, now you'd still be valid thinking that we're still going to go down. And what happens? Yeah, a couple of pips away from it on that one. And then still the same, double bottom needs to be taken there. That's a strong draw liquidity, above the draw liquidity. That's a stack draw. And there you've hit full TP. Okay, so there's the first one. The other thing to notice is this is happening at the end of the macro. Now, if you don't know what we mean by macro is basically the last 10 minutes and first 10 minutes of every hour. So this would have kicked in, the macro time here would have been 14:50 our time in the UK, which would be 10:50 in the US. Right, now this again, I'm going to change that a second, bear with me. Okay, this is an added confluence for staying in the trade if you've been in the trade as well, because what you very often find is when the macro kicks in, which was there, you'll get a macro boost, which will help get you to your target, which is exactly the way that played out. So if you wanted to look at that crystal clear, I've got an indicator that does this, but I wanted to make this super obvious for today. So that there is your macro time frame, right here. So the next thing to notice regarding this now is potentially a macro power of 3. So what does that mean? This is just another entry model. We've had one successful entry model there. Even though it was choppy, it did play out. Now we've swept London low. So what we got to look at now is where the macro actually opened, which in this case was there. Okay. And that's your macro open point. Now if this is going to play out as a macro power of 3, then that's the thing that we need to pay attention to, the second part of this. Okay, so we're going to put that in as macro open so we know what we're looking at. So what we'd expect in a macro open is just like a daily, weekly, 15-minute candle or any other candle. We'd expect it to manipulate, consolidate, maybe on it's usually quicker on a 20-minute time frame, but it dip down, take the London low, and then change the state of delivery and expand upwards, because our next obvious draw liquidity, if that is to play out, if being the operative word, would be this here. And the reason for that is it's simply the opening range high. Okay, so that would be our next drawn liquidity. Well, remember, price only moves from liquidity to liquidity. It's the only thing that counts. So this is all macro time frame, right? So what we're looking to see now is, let me just get rid of that a second, is what happens next. Even though this is coming out of the macro window, this has happened in the macro, and that's good enough. Okay, so even a bit lower again, indecision candle. Do we go up? Do we go down? Another one, hammerhead candle there, different on a different time scale. That's another point of reference to come back to. Looking decent. Oh, and pull back again. All right, so it could be over. Let's have a look. Another indecision candle. Balance rate and bump. Now that is a big expansion through there. That now becomes very, very valid, and it's one of the strongest bits of, it's one of the strongest entry models that there is, really. So straight away there, you're into a long. Okay, that could be a target, and should be for this, to be quite honest. And your stop loss somewhere sensible. So you know, you could go there at another 7.6, but I mean, you want to put your stop loss, let's say, all this is also balanced price range because you've got sell side and buy side. So again, you know, even that would be a valid stop loss there. But give it a bit of extra safety in mind. This is the only bit that counts, is do you get to where you're aiming for? That's it, right? So let's see how this works out. If I've done that stop loss big enough, and what happens next? Bear in mind the price is still choppy. Well, we're still in. And bosh, we've just made a new high. So we've broken out. This is also then an order block. So those two red candles there and that red candle there, that's an order block, and that's an order block on top of an order block, which makes that a propulsion block. Either that candle there or maybe the two together. But that is very strong signature in order flow that we still got bullish price action. So nothing to worry about there so far. Up we go. The yellow line is the 8:30 open. The drawn liquidity is where we wicked up. Very instructive price action today. You want to study this a few times. Make sure this is drilled into your brain. Both of these are things that you'll see happening time and time again. Pushing up. Important to stay above that yellow line. We drop below it there. Up. Bear in mind now, again, if I was here, I'd still be thinking, well, that's my ultimate drawn liquidity, so that one should be easy. That should be an easy first TP or full TP. Okay, and then we go back up again, and there we go. That's taken. So if you hadn't taken everything off there, which I'll be honest, I probably would have, then that would be your next TP there, right? Reason being, we've got order block, propulsion block, another order block again. So that becomes relevant in terms of order flow. Okay, so we'll just change that to, let's just change it to order block. Can't find order block. Let's just do that and take that out. Sure, I had one for order block. I've done a VI. Anyway, all good. So let's just play this out and see what happens. We've got another macro window kicking in now. Now this is key, right? If you were staying in, because what you've got there is an order block. 1, 2, 3, 4 rejections. Bullish indicator again. Up we go. And there you go. TP2. Now, this did sort of push up even higher. It nearly filled the whole fair value gap in, which would have been the ultimate target. So we'll just play that out just to show you, but there's a lot of information in here, guys, okay? Tons and tons of information, which is super, super important. So study this, and then we've got a order block there. Note this as well. Another order block on top of an order block. That's all it is like support and resistance, that's all, but it's more defined. And that again is a propulsion block, and look what happens when the propulsion block locks. So we get the 4 rejections, one big drive up in terms of price again. So again, obviously you would de-risk these as you're going up, you know, just to safeguard your capital, which is always key. And then if we just leave this play out, something again you will always get after you've taken a draw on liquidity is a little bit of resistance. It's just consolidation. It's done a move, even though it's very choppy. It's done a move, consolidated, pushed up, consolidated again. Okay, we're going to push up there. Let's just change that to 5 times a minute. And that's it. So that's enough to have a really, really good day on the charts, guys. And there's an awful lot to learn in there. So as I say, it didn't quite get up to the top of it, but it almost did. So again, you know, even if you'd taken left a run at that point, you could have got out anywhere up here with a bit of extra profit as well. Because your stop loss obviously would be more than in profit by that point in time. So it's a win-win situation as far as we're concerned, to be honest. Let's change that to 10 times. Let me just leave that run through. But again, whilst that's doing this thing, I know for a fact it didn't quite take it up. And there you've got the H plus play. So that's the closest it's got to it, look. But here, there is an absolute mine of super, super important information. So my advice would be replay this a few times, have a good look at it, and take the lessons of there. Okay, I'm out for now.